Hello, I am Robert and welcome to my channel where I discuss everything automated algorithmic trading or simply algo trading. Today I'm going to talk about using Jackrabbit TV with Oanda. Now recently I've been focused heavily on Oanda using the grid bot I built. But that doesn't negate the power and perseverance that Jackrabbit TV offers. It is still a significant tool in my arsenal and one that should not be underestimated. The power of the Jackrabbit TV modules in the forex market is just as strong and resilient as they are in the cryptocurrency markets, if not more so in certain respects. So in this video, I'm going to discuss a couple of different approaches for trading forex pairs with Jackrabbit TV. Now the very first thing that we need to really cover is the pips. Since Jackrabbit is percentage based, we need to determine percentage to pip. And that is really very simple for the euro, USD, or similar assets. And it really applies to any asset. And that is 1% is always going to be 100 pips with euro USD or thereabouts. There's a little bit of room to play with, but it's very consistent. So 10 pips, which is what I use for my profit, is roughly 0.1%. Now, since the normal spread is 1.5 to 3 pips, that always gives me a very consistent profit level well above my fees. And you always get that simply by taking the price times 0.1, and that will give you the number of pips. And that could be whatever you want for your spread, because once you have the pip conversion rate, you can then take it to any level you want. So if you know 10 pips is 0.1, then 30 pips is going to be roughly 0.3. So it sounds complicated, but it's not, and it really is very easy math. So let's get started with what's on the screen. This is a very simple savings account module and approach. The Jackrabbit savings account is an always-in approach, and it does exceptionally well. For example, down here are all the buy markers. Up here are all of the sell markers. Now the savings account has one limitation because of its simplicity. It only trades long positions. I will show in a little bit how to trade short positions, but this is meant to be a very simple process. So let's take a look at it in greater detail. This is using a 0.1% take profit and a 0.1% deviation. So that means your budget required for this particular setup is going to be about $1,000. And that is using just single unit sizes. So 1 unit trades. Very easy to figure out. Always start with the base of 1% with a maximum number of 100 positions. And then from there, you have that ratio that you can then figure out anything else you want. Again, very easy mathematics. And you can use what's on the chart here to help you refine, plan out, and actually test to figure out what is going to be appropriate for your own personal budget and situation. In this case, we are looking at the 1 minute chart, and with the 1 minute chart, I have 50 completed trade cycles. So 50 times I have made a profit from this chart. My average profit is 0.13%, or roughly 13 pips is my average profit. Now this part tells you that it's in a cycle and it's on the second purchase of that cycle, and that the maximum number of cycles thus far, the maximum number of purchases per cycle thus far for the history of this chart is 13. Now, if you spent any time studying Jackrabbit or listening to my videos, you'll hear me talk about the golden rule. So the maximum number of buys doubled, rounded to the nearest 10. 13 doubled is 26, rounded to the nearest 10, means you need a minimum of 30 positions of whatever your position size is. For example, if it's 1 unit, then multiply 1 unit times 30 times the maximum price of the chart as a safe budget. Not a guaranteed budget, but a safe one. The impact of that will give you time to react. And that's the critical point. Time to react to whatever the market is doing, and to make sure that you don't end up with a margin call. Now let's go through a couple of pairs and see just how well a simple approach like this works. Now you will need to play with your deviation and your take profit. But as you can see, using percentages means it always takes that into account for you. And it figures out and converts it internally. So you always get the profit even without having to go through the math directly. But you really should know it so you can verify for yourself exactly what is going on behind the scenes. So as you can see, the process works very well. And it does so very consistently. And it will work on any and every time frame. I just personally prefer the 1 minute. The Australian dollar, US dollar is quite an active one right now. 70 completed trade cycles is quite nice. Before you trade any pair, study it, learn it, understand it. Do your research. Okay, so now that we've seen a very basic and very simple process, let's go and look at a more complicated process where we can actually short the market. Remember, the savings account can only take long positions. It's meant to be a very simple introduction into what Jackrabbit is really capable of doing. So here on this chart, I've prepared a basic system that shows the shorting. And you know the shorting because the green line, the take profit, is on the bottom. The deviation, the red line, is on the top. So you can easily see within Jackrabbit which direction the algorithm is set up in based upon that very simple situation. If green is on top, it's a long position. If green is on bottom, it's a short position. And you can see here the statistics of that position. Now, first, let's talk about the approach I used, since this is a little more complicated. This is a very simple MACD that you can tune and do a lot with. Very simple. You'll find videos of it in my playlist on how to use the MACD. It's one of my favorites, and it's very powerful and very resilient. And here we have the DCA module, and I've tuned it to only allow 99 positions, which you can see here by the maximum number of buys. Now this is more aggressive than the savings account, which is fine. It's more powerful. You can tune it to be less aggressive if you want. Here you have the power to really shape what you want in the algorithm and approach. But you can see the number of cycle buys, the average number per cycle, the maximum, and here you see how long it took to achieve its profits. Using this technique, it covers the last 21 days. And it accomplished 31 trade cycles in that 21 days, with an average profit of 0.15%. And the last profit, the last completed trade, was 0.11% profit. Very simple, very elegant, very easy to work with. Remember, in trading, the most simplest approaches are always going to be the best approaches. The less moving parts you have, the less likely it's going to break. So this is the MACD module and the DCA module. But I've prepared a second strategy or a second module for this chart, because some people like to use TradingView's strategy tester. I have prepared the Jackrabbit analyzer, and it is set up exactly identical to the DCA module. But instead of its own reporting, which you still see here with the exact same previous numbers, it uses the TradingView strategy testing engine. And I'm going to show that right now. Let's enlarge this. There we go. And now you can see just what the accumulation looks like in a real situation. And you could actually take and tune your actual budget in the strategy tester. So if you prefer the DCA module as I do, you have that option. If you prefer the strategy tester, then that option is also available, where you can evaluate different pairs. And as you can see, the drawdown, the balances, all of the things you expect, and where the worst case scenarios are going to apply with the accumulation process. So let's actually start looking through some of these other simple examples. Again, take profit is 0.1%. Deviation is also 0.1%. So if you're doing 1 unit trades, you're going to need a minimum of $1,000 in your account to ensure full saturation of the worst case scenario. But as you can see, different approaches, different contexts, and the examples of what you are going to achieve. Now, some people will mock this as not even worth the time because the numbers are so small. But aggregation is not about big profits. It's about consistent profits that will add up over time reliably. And as you can see, if you buy and hold, yes, you will have a period when the market just won't be doing good, but buy and hold will. But then you'll end up in a situation where buy and hold will over time not work well. See, the biggest problem with buy and hold is, very simply put, how long do you hold before you cash out and get a profit? You only profit when you make the sale. If you don't make any sales, or you don't sell off your positions, you don't profit. Using a consistency layer like what Jackrabbit does for accumulation gives you the ability to buy and accumulate over time, and as opportunity presents itself, sell it with a clear, consistent profit. And as you can see, that clear, consistent profit over time will always come in your favor. But the one thing that accumulation does not guarantee you is you don't know how long it's going to take for a trade cycle to complete. So it requires patience. And that is something you must be aware of when you use any kind of accumulation. If you can't be in the market for a year or more for a given asset, then you've not done your research and you've not taken the time to prepare yourself in understanding what market you are actually trading in. Accumulation will, all but guaranteed, give you a profit. There are, of course, situations that are just bad, like market liquidations or poor planning. And sometimes you can see things don't go always well, and you end up holding for a very long time. That's not necessarily a problem as long as you understand the process. But you must understand the process clearly to benefit from the consistency that it brings over time. And as you can see, some accumulation does not take your budget red, but it still requires an acceptable layer of patience. And this one only did 128 trades, whereas this one did 271 trades. And here, buy and hold looks great. You've bought it and you're holding it. But where are you making money? Always remember that when you're trading. The point of trading is making money. And if all you're doing is holding, you're not making money. So let's keep looking at some of these various trades. This is the critical point. Always look at your information. This particular pair brought in 402 closed trades. That is quite a nice amount of trading. Of course, if you're only trading a small amount of money, you're only going to get small amounts of profit. So always think about that as well. What level of profit do you want to achieve? Think about your balance. Think about your budget. All of that takes place with accumulation. And in this particular case, we are using 1% of our equity. And the commission is going to be roughly 2 pips on average. Now you can change that appropriate to your own personal situation. But as you can see, I'm only using an actual budget of $1,000. And this does not take into account leverage. So if you're using Oanda with 50 to 1 leverage, you're looking at 50 times 4, $200. So again, think carefully, plan carefully, research carefully every single aspect of your trading. Not every trade is a good trade, and not every pair is worth trading. It depends upon you, your budget, your risk assessment, and what you are trying to achieve. The realization of your trading is critically important on the basis of your own personality. This isn't a magic get-rich-quick system. It is a tool, and that tool has its place appropriate to your ability to use it. Now, the thing about this tool is the more you use it and fine-tune it, the more likely you are to get an approach that works best for you. I've chosen a very simple approach, and within that simplicity is some very specific details. Those details hide a lot of the risk, and every system has risk. This is a good example on the screen. The New Zealand dollar against the US dollar. You see very clearly it has 4 points of significant accumulation, with one of them being a very deep accumulation. Now it's 274 trades, so it's going to be profitable for the long term. But you have to consider your own personal situation with respect to how this system functions. 0.1% deviation may not be a situation you can handle. So you might actually want to try a deviation that is different. Let's try a 1% deviation. And you will see immediately a very different type of system. You'll see different levels of drawdown, different levels of trade, different levels of accumulation. Your deviation controls your budget. That is critical. You are not going to make the same amount of money with a higher deviation level that you will with a lower deviation level. But you don't have the same risk. A 1% risk can be done with a $120 budget. You won't make a lot of money, but you won't need a large budget. A 0.1% deviation has to have at least $1,000. So there are ways to tone and tune the approach appropriate to you. Most importantly, all of this works with the demo account, and that works with Jackrabbit Relay. And that is the next step when you set your alerts up. This first example is for the DCA module, and it uses the digital signal remover and the OANDA exchange. Now here is my sandbox for the DSR and my demo account, and I've told it to buy 1% of my balance in units, and that gets rounded to a whole number only. So if it is, for example, 1.5 units, by the time it's done with all the math, it will only be 1 unit. Now, when using TradingView with Relay, in order for it to actually work on a consistent basis for more than one asset at a time, you will probably want to remap the symbol from TradingView to OANDA. Using the TradingView macros gives you a way of using the system and the same message on multiple forex pairs without a lot of unnecessary changes. And of course, this is just a link reference for your own situation based upon the logs produced, so that you can see exactly what is more profitable versus what is not profitable by actually getting the link to the chart itself. And everything revolves around your identity that you set up when you installed Jackrabbit Relay. Now up here I put buy, but you can put sell or close. If you put close, it closes out the entire position altogether, which is more than likely what you want. If you put sell, it only sells 1% of your position. Most likely, that is not what you want. You are always going to probably want close. But that's a little different when you use the Jackrabbit Analyzer, because it only allows buy and sell as a default when it generates its signal. So you need to tell Relay that whenever it gets a sell signal, that you want it to close it out completely. So this will allow you to do just that automatically within a given trade. Now you see the rest of it really isn't that different from the DCA module. And it still uses the DSR and the OANDA account. But very simple, very easy. This would be your alert message or Jackrabbit payload. So as you work with Jackrabbit, both TradingView and Relay, you have consistency in layering all the way around. And that is an important aspect of your trading. Always try to be consistent in every approach. Consistency really represents a critical component within your trading, because consistency makes it easy to spot very simple mistakes that can cost you a lot of money before they cost you money. So by backtesting and by using the relay testing mechanisms, you can begin to find and really determine the best approaches for trading. If you like this video, please give it a thumbs up. If you're not following me and you want more content like this, please subscribe. If you have any questions, please feel free to leave them in the comments or on the support server. Thank you for watching, and until next time.